Good morning, children. I welcome you all to the accountancy class. I hope you are doing your test correctly and with integrity. Okay, so far, how many chapters we have finished? We have finished accounts from incomplete records, that is chapter 1, accounts of not-for-profit organization, chapter 2, and then company accounts we finished, and then we finished ratio analysis. So how many chapters we have finished so far? We have finished 4 chapters. Now we are into the next chapter, that is accounts of partnership firm fundamentals. Right? Okay. You all know what is a partnership business. When two or more persons join together to form a business to share the profit or loss arising therefrom in an agreed ratio, the relationship among them is called partnership. So, when two or more persons agree to do a business, sharing the profit or loss in an agreed ratio, if the ratio is not given, it may be equally, then it is partnership. The business may be carried on by all or any of them acting for all. What do you mean any of them acting for all? Either one person can be active or all the persons can be active taking part in the business. Now this is a definition of partnership. When I say definition, you have to learn it by heart. Very good. According to Section 4 of the Indian Partnership Act 1932, partnership is defined as the relationship between persons who have agreed to share the profit of a business carried on by all or any of them acting for all. Features. What are the characteristics of the partnership? It is an association of two or more persons. So the minimum should be 2. The maximum is 10 in banking and 20 in any other kind of business. The maximum number of partners is limited to 50. There should be an agreement among the persons to share the profit or loss of the business. The agreement may be oral or written or implied. The agreement may be in oral. It can be only words. Or they can write and keep their agreement. The agreement must be to carry on a business and to share the profit of the business. The business may be carried on by all the partners or any of them acting for all. So how many points do we have? 4. First one, number of persons, 2 or more persons. Maximum is 50. So minimum is 2. There should be an agreement among the person. How can the agreement be? It may be oral or written or implied. The agreement, what should be the agreement be? The agreement must be to carry on the business where the profit will be shared by all the partners. And then the business may be carried on by all or any of them acting for all. Clear till this? Okay. Partnership deed. Now we said we were talking about agreement. Agreement for what? To share the profit or loss. Now this agreement, we said it may be in oral or it may be written. What is partnership deed? When the agreement is in writing and if they are going to register it, then we call it as partnership deed. Clear? When the agreement is in writing and it is registered, then it is called as partnership deed. So partnership deed is a document in writing that contains the terms of the agreement among the partners. It is not compulsory for a partnership to have a partnership deed as per the Indian Partnership Act 1932. But it is desirable to have a partnership deed as it serves as an evidence of the terms of the agreement among the partners. So partnership deed is not compulsory. But it is better, it is desirable to have the agreement in writing. Okay, now let us see the content of partnership deed. What all should be registered? Name of the firm and nature of the Nature and place of business. What is nature? Whether it is going to be a trading business or a manufacturing business. Date of commencement and duration of business. Date of commencement, from when they are starting, and duration, for how many years, for how many months the business is going to be carried on. Name and addresses of all the partners. Capital contributed by each partner. Should it be equal? Not necessary. It may vary. Profit sharing ratio. Either they are going to share the profit in an agreed ratio, or they are going to share it equally. Amount of drawing allowed to each partner. What is drawing? Yes, it is the amount taken by the proprietor for personal use. Rate of interest to be allowed on capital. Rate of interest on drawing to the partners. Rate of interest on loans provided by partners. Okay. You know what is rate of interest on capital and on drawings. What is rate of interest on loan? Sometimes the partners, whether before getting loan from any other organizations, any one partner may lend the amount as loan, not as capital, but as loan. So the business has to pay an interest to that particular partner. That is interest on loan provided by the partners. Amount of salary to be allowed to any partner. We saw it can be a business carried on by all or any of them acting for all. If one partner is going to be a full time on the business, then the other partners agree to pay him a salary. So how much salary has to be paid for the partners apart from the profit or loss? Maintenance of accounts and audit procedures, procedure for admission of a new partner, procedure for retirement of a partner and settlement of dues to the retired partner, method of valuation of goodwill and valuation of assets and liabilities at the time of admission or retirement or death of a partner, appointment of executors in case of death of a partner, and settlement of dues to the legal heirs. Settlement of accounts on dissolution of firm. What is dissolution of firm? When they want to put an end to the business. That is called as dissolution of the firm. So how many points do we have? 16 points. Right? Okay. Learn it thoroughly. Now, what are the final accounts of partnership firm? What are the accounts of our partnership should maintain? Manufacturing account. When the partnership is to manufacture, produce goods, then they have to prepare an account called as manufacturing account. Trading and profit and loss account. You know, trading account is prepared to find out the gross profit or the gross loss. Profit and loss account is prepared to find out the net profit or the net loss. Profit and loss appropriation account. This is prepared to find out show the disposal of profit and the surplus. Okay. So how much profit each partner is going to get it. For that, we are going to prepare profit and loss appropriation account. And the last one is balance sheet. Balance sheet, as usual, assets, liabilities and capital to ascertain the financial position of the concern. Right. Methods of maintaining capital account of partners. So far, we were preparing accounts for the business, not for the businessmen. But now we are going to prepare accounts for the businessmen. Right. So we have to prepare capital accounts. We have to prepare capital accounts. Fixed capital method. What do you mean by the word fixed capital? Nothing but the capital is not going to change at any time. At any point of view, they are not going to change the capital. The capital is going to remain fixed. If they are going to follow the fixed capital method, then they have to prepare two accounts. One is the capital account, the other one is the current account. In your capital account, you have to show only the capital amount and all the other things like interest on capital, interest on drawing, profit or loss, salary, commission, etc. It has to go into the current account, right? So, under fixed capital method, you have to prepare two accounts. One is the capital account, the other one is the current account. So under fixed capital method, the capital of the partners is not altered and it remains generally fixed. Two accounts are maintained for each partner, namely capital account and current account. The transactions relating to initial capital introduced, additional capital introduced, and capital permanently withdrawn are entered in the capital account, and all the other transactions are recorded in the current account. So, three things. What is the capital he has introduced? What is the additional capital he has introduced? And how much amount is going to permanently withdrawn from the business? That is going to be entered in the capital account. Clear, children? Right. See, this is the format of your capital account. Partners capital account. What is this A and B? Name of the partners. Partner A, partner B. Okay. See the format. Date, particulars, partner A, partner B. That is on the debit side. Date, particulars, partner A, partner B on the credit side. What is this buy balance brought down? That is the opening capital amount. Buy balance brought down, and then see buy cash or bank account. That is the additional capital introduced by each partner. That is on the credit side. What is to cash and bank? When a partner permanently withdraws from his capital, that has to be recorded. When he is going to permanently withdraw, what do we call it as? Very good. We call it as drawings. So that is on the debit side. So to cash or to bank amount, and then as usual you have to tally your capital account. Clear? Two things. Opening balance and the capital introduced on the credit side. On the debit side, permanently withdrawn amount has to be written on the debit side. Clear? Right. Next one. Partner's current account. This account is credited with interest on capital, partner's salary or commission, and share of profit to the partner. This account is debited with drawings. See, when he permanently withdrawn, where did we write? We wrote it on the debit side. Same. The account is debited with drawing, interest on drawing, and share of loss of the partner on the debit side. Now balance your account. That will show a debit balance or a credit balance. As a result, the balance in this account changes periodically. Current account may either show a credit balance or a debit balance. Now this is a format of your current account. Can you see? Date, particulars, partner A, B on the debit side. Date, particulars, partner A, B on the credit side. It may start with a debit balance or it may start with a credit balance. If your problem shows CR, credit, write it on the credit side, or it will be shown on the debit side. Then interest on capital, salary, commission, profit on the credit side. So what all will you write on the debit side? If it is shown as DR, then the balance should be written on the debit side. Along with that, drawing, interest on drawing, and loss. After posting all these entries, tally your account and find out the balance. The balance may be on the debit side or it may be on the credit side, or it may also be for one partner on the debit side and the other partner on the credit side. Clear, children? Okay. Yeah. Problem time. Bragadish and Naresh are partners who maintain their capital accounts under fixed capital method. So your question is fixed capital method. When they say fixed capital method, how many accounts will you prepare? Very good. 2 accounts. One is the capital account, the other one is the current account. From the following particulars, prepare capital accounts of the partners. Right. Now you have capital, current account, additional capital introduced, drawings made, interest on drawing, share of profit, interest on capital, commission and salary. Now tell me what all will you write in your capital account? Very good. The opening capital and the additional capital. Where will you write? On the credit side. Do you have any permanent withdrawal? We don't have any permanent withdrawal. So after writing on the credit side, you have to just tally your capital account. Clear? And all the other things on in your current account. Do we have an opening balance for current account? Yes. See, current account on 1st April 2018, 20,000 CR, 15,000 DR. So for Bragadish, you have to write the opening balance on the credit side, and for Naresh, you have to write the balance on the debit side. Clear? Right. Then drawings, interest on drawings on the debit side. Share of profit. Profit has to be written on the credit side, whereas loss has to be written on the debit side. Interest on capital on the credit side, commission, salary. Then tally your current account. Clear? Any doubts? See your capital account. Partners capital account, by balance brought down, by bank. You don't have any drawings, that is permanent drawings. So they are tallying the account and finding out what is their new capital. See the current account. Current account starts with to balance brought down for Naresh and by balance brought down for Bragadish. And then your profit and loss, drawings, interest on drawing, interest on capital, commission, salary and profit. Then you have to tally your account and find out the balance. Clear? Right. So children, this is your homework. Do it in your accountancy notebook. Right? And no need to post it. You can just have it there. But please try doing it. Many of you are coming for the Zoom. It will be good if all can come for the Zoom and learn it from the teachers live. Right? Okay. Thank you. Take care. Do your test, but without taking it from your guide or from your friend. Try doing it by yourself. We trust you, children. God bless you.
Let us recall what we learned today. I'm fine with that.
I'll start. Meaning and definition of partnership.
Features of partnership.
Meaning of partnership deed.
Content of partnership deed. Final accounts of partnership.
Methods of maintaining capital account.
Under that, we studied maintaining fixed capital method, which has two accounts. Yes, one is capital account and the other one is current account.
And we also solved a problem.
Miss has given us a homework.
We'll do that.
And we'll take up the test.
Bye, friends.